Marcella.
Good morning. Hello, Maria. How are you?
I'm good, thanks. How are you?
I'm doing great, thank you. Good to have you.
Good to be here.
Yes, and looks like we already have a few participants joining, so that's a good thing. Have you been doing pretty busy with the program?
Yeah, actually pretty busy with the program. We're happy to report that, we're getting, some good applications in. So, I mean, it is what it is. It's the mad dash for about 2 months, and then, hopefully I'll get some time off.
Yeah, I hope so for you too. I'm afraid after today you're gonna get more requests. So
I want to put the money out, so I'm if I can put it out faster, I hope everybody on this call puts in 5 applications.
Okay, that's good.
So I can get this money out and I can get to my time off faster. I have a goal here.
Okay, well, there's a plan for that. That's good. Great. Well, let me go ahead and I'm going to prepare. Great. I'm getting this in here and I'm gonna check with our other 2 speakers. So I'm gonna mute myself for a minute, okay? Can you hear me, Maria?
I hear you.
Okay, good. Now I'm trying to figure out here, how do I mute myself?
I really, I don't know. Honestly speaking,
Maria, Marcella, how's it going?
Hello,
Nathan,
MJ.
Raju, a lot of good familiar names here. Nathan, how's it going, man? I think people are on mute, but that's all right. Hello.
I think he's on mute, yeah.
Hi, everybody.
Hi.
Hello,
Hi.
who was that?
That was Raju.
Oh,
Hi.
hi, Raju. How are you?
Fine. How you doing?
Good.
Yeah.
Good to have you. So let's see. Okay, we have Javier who's connecting, and then we should be able to start soon. Let me check something here with one of you. Recording. Very good. So, here. Good. So it looks like we have Javier with us now. So I think we have all the presenters, and just to make sure we're not, we still have people joining us, but I think we want to keep our time, you know, to keep respect everybody's schedule. So let's just go ahead and get started. And I want to welcome everybody. I don't know if you all, hello Javier, Pedro.
Hello.
So it's good. Glad to see your names and yours on the screen, like you, Nathan, right now. It's great. Thank you for joining us today. Most of you are familiar faces and names, and we wanted to share with you, we wanted to welcome to this session because we wanted to share with you some other opportunities for funding that you can have, you know, as a tool for your business, or that you can also share with your businesses that you work with. I see some of our partners here. So just to get a better understanding of these new opportunities, and also just how to make the best of what's been out there before, like the PPP. So I want to welcome you. I'm going to introduce myself for the new names out there. I am Marcela Dinas. I am with the Community Fund of North Miami-Dade. Can you hear me okay? Am I speaking loud enough? Good, great, very good. So the Community Fund of North Miami-Dade is a subsidiary of the Opa-locka CDC. So some of you might be more familiar with Opa-locka CDC, but that, you know, the actual business fund support comes from the Community Fund of North Miami-Dade. And we partner with many of you, with many other awesome organizations that, you know, some of them we have today, so that you, as a business owner or as an entrepreneur, you have a wide range of resources at your disposal. So we're going to talk today about access to capital, you know, now with coronavirus, and hoping that this would be valuable information for you and for your business, you know, providing aside that, you know, you're all doing well, staying healthy and staying strong. So let me go ahead and I just want to introduce our speakers for today so that you know who you're going to be hearing from. So we have Maria Cotto. She is Executive Director of Partners for Self-Employment, and she will be talking to us about the Forgivable Loan Program. So Maria, do you want to say hi really quick?
Hi, everyone. Thank you for having me. I look forward to sharing the information with you as this goes on.
Great. And then we also have Javier Jorge. He is the SBA director, and he works with Pilot Bank, and he is all things SBA that he will be sharing with us today about the guidelines, the latest guidelines and loan forgiveness, so that you can really get to keep the dollars from PPP if you've already received that one. So Javier, I don't know if you're out there, if you can say hi to the group.
Happy Thursday, everybody. Happy to be here and to help.
Thank you so much for joining us. And then we have Michael John Green. He's the loan fund manager for the Community Fund of North Miami-Dade, who is going to be talking with you about a new program from the county. So MJ, you want to say hi?
Hi, everybody. Thank you for joining us. Thank you for setting this up, Marcella, and we look forward to giving you guys hopefully some useful information.
Absolutely. So this is what we're gonna have, prepared for the next hour. So the first item on our agenda, we will hear from Javier about the forgiveness guidelines from the SBA. And then after that, we're gonna move on to talk about the Forgivable Loan Program from Maria. Then we're gonna talk about the RISE Loan Program from MJ. And then, after that, we're going to have some discussion with all the different participants, and speakers as to kind of really what do you need to do to be prepared to access these opportunities. So stick around because, we don't want to know what it is, but you also want to know what you need to do. So just really quick, for those of you who are new to our organization, I just wanted to share a little bit about us. We are a community development financial institution, the Community Fund. Our main goal is to support small businesses and entrepreneurs, and we do that in two ways. We do that through access to capital through loans for startups and for small businesses with loans up to $100,000. And then we also provide business guidance and support through classes and sessions like this one, now online, and before also on a classroom, where we will provide guidance on different topics that help you as a business be a better business, run more efficiently, and just be better well prepared. So we do that through group classes, or also we do that through one-on-one directly from us. We leverage our partners. Many of you are here. So you will be able to connect with them too if you ever need more than what we are able here to provide. And so today's class is one of those supporting guidance for you to be able to access capital in a specific time that we just need some more relieving program. So let me go ahead and then let's get started. For some of you that have already accessed the PPP, and just get an understanding from Javier, what is it that you want to make sure you're keeping in mind to get those forgivable loans and your dollars in your pocket. So Javier, the floor is yours.
All right, man. Thank you, Marcella, and once again, good afternoon, everybody. So as a quick recap, for those of you who probably, if you have been living under a rock, there's this program called the PPP, right? Paycheck Protection Program that was part of the CARES Act that was passed, I believe, March 27th. The first day of the PPP program was, I think, April 10th, I believe was the first day. And it feels like it was last year, but it was only 2 little months ago. And the program went through some roller coasters. The first initial tranche was for about $350 billion, which did not last more than 8 days of availability. That triggered Congress to reallocate more funding for the program, an additional $310 billion. And the expectation between the banking community and in general, the small business community, we thought that that money was going to run out in about the same amount of time. Surprise, surprise, there's still $130 billion left, right? So there's the big difference between the first round and the second round. The average loan size is a lot smaller, and the majority of the loans that were originated in the second round were done by small community banks to small businesses, true small businesses, not the big businesses that we heard on in early on, like I think Shake Shack was a good one, or the Lakers, right? Imagine the Lakers getting a PPP loan. But anyways, that was the evolution of the program on the front end. And inevitably, at some point, we being the banks, got efficient on trying to get the money out the door. If for some reason you still haven't had access to it, you still have time. The program, from an origination perspective, officially ends June 30th. So if you haven't had a PPP loan, or if you know someone else that hasn't had one, they need to get funded prior to June 30th in order for them to get access to those funds. Okay, so that's point number one. That's very, very interesting. Now that the majority of people who wanted PPP loans have received them, we're now in this forgiveness component, right? Because the PPP, when you originally sign up, it's a loan. You're going to sign loan documents. You're going to have a note with a structure of a repayment. And the grant provision is accessed during a loan forgiveness application, right? So we know the original rules. 8 weeks of payroll were the limitations to what you can use for your access to funds. And that could have been used for 75% payroll purposes and 25% non-payroll purposes in order for you to receive 100% forgiveness. The law was just amended. There's the Flexibility Act, which was passed into law when the president signed it, I believe it was Friday, made some critical changes into what that loan forgiveness eligibility process looks like. I want to go over some of the main highlights of the changes. First, it confirms that the borrowers that used less than 60% of their PPP loan amount for payroll costs during the forgiveness covered period will still be eligible for partial loan forgiveness. So the new law stated that instead of it being a 75-25% split between payroll expenses and non-payroll expenses, that was the requirement for you to get eligibility. The law changed that to a 60-40 split. So now 60% can be payroll related, 40% can be those non-payroll eligible expenses. For example, rent obligations or lease obligations that were in place prior to February 15th, utility obligations that were in place prior to February 15th, and any business purpose interest expense that's secured by some sort of property, whether it's real estate or personal property. That is also now extended to that 40% cap with that 15, if you had it in place prior to February 15th. The way that the law read initially when we were reviewing it last week, it was an all or nothing provision. So if you did not spend 60% of payroll of your loan amount, let's say your loan amount was $100,000 and you didn't use $60,000 on payroll expenses, the way the law read, it said that you would get no forgiveness. But there's been a clarification now with the guidance we received. This one came out last night, saying that there is a proportional relationship, just like it was originally intended. So if you have, for some reason, you don't meet your wage or your full-time employee headcount component, it would be proportionally drawn down, not it's all or nothing. So that gives additional protections to the small businesses who took out these loans. Additionally, the covered period, the thought was if anyone who got a loan, the period would end in June 30th, regardless whether that was 6 weeks or 8 weeks into your covered period portion. That covered period now has been extended to 24 weeks, and the total extension now expands to December 31st, 2020. And so your 8 week period that you had to use your funds is now at your election up to 24 weeks. So now you have almost 3 times as long in order to spend the money the way that Congress intended you to in order to maximize your forgiveness amount. Another component that's critical for those people that are not going to acquire full forgiveness, this is a new update to the law that provides a 5-year maturity to the loans for the portion that is not forgiven. Originally, that was only going to be for 2 years. So you can imagine that the principal and interest payments on that, interest is small, it's 1%, but that principal repayment over a 2-year term basically has been more than doubled, extended to 5 years, allowing additional repayment capacity for those pieces that are not forgiven, okay? The only other thing now that has been changed is all these loans had 6 months deferments, meaning that all principal and interest payments are deferred for 6 months. And the idea originally was that you were going to be able to apply for forgiveness in that period. Because of the extension of 24 weeks, because the program has been expanded through December 31st from a involvement perspective, the SBA has now stated that after 10 months, or actually within the 10 months, at the end of the loan forgiveness period, right, whenever your period is ended, 10 months, you still have no payment requirements, as long as you're attempting to get forgiveness. So if you have your application to your bank and you're working with your institution to apply for forgiveness, you will not have to make payments on the loan whatsoever. Payments will begin only for the amount that is not forgiven, if there is any, and will begin after that period is over, okay? Key things to keep in mind: the majority of the burden on proving whether an item, what forgiveness is going to be approved or not, is on the borrower. The banks have been given very little, actually a lot of discretion on the ability to approve forgiveness. But what banks are going to be looking for are supporting documentation for each line item expense that you're going to be providing that you qualify for forgiveness. So for example, we're going to want to see your payroll activity for the period that you are asking for forgiveness for. We're going to need to see copies of the statements. For example, if you're going to use your water, electricity, or utility bills, we're going to want to see copies of that and copies of payments, right? Either canceled checks or account statements demonstrating those payments were made. And the same thing goes for, let's say you want to count your interest expense on your let's say, mortgage that you have for your business. That you need an amortization schedule as well as a mortgage statement demonstrating that you made the payment. So those are the highlights, Marcella, for the PPP program itself. If you haven't gotten it yet, the terms just got a lot better, and the ability for forgiveness has been increased significantly. So I think if you were waiting, now is the time to get it. You have until June 30th. Outside of that, the only other thing, Marcella, that I would like to share with the group would be some additional changes that were done for the general SBA program. So SBA in general, is for business purpose uses. Anything that you want to do for your business can be financed under the SBA in general, and temporarily through September 27th. If you originate or you apply for a regular SBA loan and you receive it before September 27th, the first 6 months of payments are on the government. So the principal and interest payments for that loan will be paid by the government. They're not deferred. They're not put at the end of your amortization schedule. They're paid. So that's basically 6 months of free payments on any for business purpose use that you have. The only catch, though, is you need to show the bank and the SBA that you have the ability to repay cash flow during the current interim. So if you were tremendously or negatively impacted by by COVID to the point where your capacity for repayment is impaired, your traditional SBA application will not qualify. You need to demonstrate the ability to repay even during this critical component in this period of time. So that is my assessment of the SBA and the PPP. Just try to keep it short and sweet, Marcel. Is that okay?
That's great. Thank you very much, Javier. We'll have an opportunity for questions and answers at the end, so that If you guys have questions as you've been listening to Javier or any of the other speakers, then just, send them, write them, and then we'll discuss them at the end. Thank you, Javier.
You're welcome.
Very good. So, well, now let's move on to talk about the Forgivable Loan Program for Miami-Dade. And for that, we're going to welcome Maria Cotto to tell us about that program.
Thank you, Marcela. I am going to give you some brief information on PSC and our regular programs. Before we get into the Forgivable Loan Program, I am going to whiz through that pretty quickly because I think the question and answer period is very valuable. I'll start with just a little brief background on Partners for Self-Employment. We are a local nonprofit, been lending in the community for 27 years now. We are a certified community development financial institution. We're an SBA intermediary lender as well. We do individual development accounts through the Department of Health and Human Services. And we also do some work with municipalities around what is training, technical assistance, and lending to small businesses. Not that anybody's interested, but we've been around for a while, so we've given our fair share of loans. A little over, actually that number has gone up quite a bit in the last few months, as you can imagine. So we're a little over $40 million in disbursements, closer to 30,000 jobs created or retained as a result of those disbursements over the years. So we are active lenders in the community. Our target market is the small to micro business that can't receive traditional lending at a more traditional source, such as a bank or credit union. Go ahead. A little bit about why we do what we do. And basically it's because we understand that small businesses are very popular in our environment. Either non-native born individuals come here to start small businesses. Small businesses have an inordinate amount of difficulty getting what would be considered a traditional loan, even though small businesses on average are creating 2.9 jobs. They still find it quite difficult to get more traditional loans. So that's basically why, the Loan Fund of North Miami-Dade, Partners for Self-Employment, and some of the other local nonprofit lenders do what we do. As I said at the beginning, we take a business from infancy through to expansion with the ultimate goal of being graduating a business to more mainstream lending. So we do the training, we do the technical assistance, we do no credit, no collateral loans in a peer environment. So you come in, you learn how to run a small business, and we take the chance, right? No credit, no collateral up to $15,000. We do expansion lending up to $50,000. And that is more traditional lending in the sense that we do look at credit, we do take collateral on those loans, but we're not credit or collateral based. We're kind of a scoring based system. So you can get points for a wide variety of things in our loan programs, such as job creation, job retention, previous payment history to non-traditional lenders, etc. Go ahead. We serve just about any business that is not considered a nuisance business. So if you can think it up, we've served it at least once. The only thing we do shy away from are what the SBA would consider a nuisance business. So adult entertainment, gambling, bars that don't serve food along with their alcohol, that sort of business is really the only thing we shy away from. Anything else is free game. So on to the Forgivable Loan Program, which is what I'm sure that everybody's interested in, right? Some money that you can get your hands on in a relatively quick turnaround time that can be forgiven at the end of 12 months. So just a little bit about what you need to know. The maximum loan amount is $25,000. They, much like the PPP, these start out as loans. So there's 12 months of no payment, but it is written as a loan. You sign a promissory note. At the end of the 12 months, if you're able to meet the conditions for forgiveness, which for this particular loan, it's the retention of the employees that you have. I'm sorry, the retention of the jobs that you have at the time that you get the loan. So the same employee doesn't necessarily have to be in the job, but the job has to be filled for a minimum of 12 months. So you're going to go 12 months without making a payment. 13th month, we're going to go in and we're going to monitor. If you've been able to keep those jobs filled for the 12 months, then the grant portion of this agreement comes into effect. Your loan is forgiven. You get a promissory note that says stamp paid, and be well. And hopefully you've been able to invest this money in your future growth. If for any reason you are unable to keep 100% of the jobs filled, then a portion of the loan remains a loan and a portion of the loan becomes a grant. So let's say that 80% of the jobs are filled at the end of the 12 months. So 80% of that, whatever dollar amount you got, becomes forgivable. The other 20% becomes a zero interest loan that you begin making payments on after the 14th month. And we work with the client in order to get them into a payment arrangement that makes sense. So the question, one of the questions that's most often asked is this loan for me? So if you've got less than 25 employees, if you need financial assistance to reopen or remain open right now, and you can keep the employees that you currently have for 12 months, right? That's the game plan, is not to downsize, not to go from necessarily a storefront to an online presence if that's going to make you lose employees. But if your business model is to keep the employees that you have, you need financial assistance to reopen or remain open, and you have less than 25 employees, so far you're golden, right? If you got PPP, we up until yesterday, you were disqualified. We've applied for and gotten an exception from the county that basically says if you got PPP, you must complete your PPP term before you can enter into an arrangement for this loan. So if you got 2.5 times your salary and you got that in May, you've got to wait for the 2.5 months before you can enter into a loan agreement under this particular program. So it doesn't mean that it no longer means you don't qualify, it just may mean you don't qualify right now. Now, if you applied for PPP, like we've seen in a couple of cases, and you apply for 2.5 times your average payroll, but you got a ridiculous dollar amount like $36, which we saw. We know that $36 is not even, an hour's worth of your time. So we would consider that obligation complete at the time of your application. So we go based on the dollar amount that you received, not the dollar amount that you applied for under PPP, to determine when you can enter into an arrangement with us. If you were not open prior to March 2020, unfortunately, this program is not for you. This program is not for the start of new businesses. It's to assist businesses that were previously operational and due to hardships or closings required under the COVID-19 require help to reopen or remain open. And then, as we mentioned, nuisance businesses are not permissible under this contract. Another frequently asked questions is, what can I do with it? So this is a lot more flexible than PPP. So you can pay rent or mortgage with it. And when I say rent or mortgage, I mean rent or mortgage for your business. Now, if you have a home-based business, a % of your rent or mortgage, based on the area in your home that you use to conduct business, can be an allowable expense. We're just going to need those mortgage documents or rent documents, and then an outline from you as to what space in your home is used for business. With this program, you can also buy PPE for staff or clients. So if you're reopened or you're looking at reopening and you need to buy sanitizing stations, masks, etc., those are allowable expenses under this program. Salaries, including individuals who are just themselves, right, with no employees, if you can show us where part or whole of your personal income comes from this business, that can be considered salary, and you can use this money to cover salaries. You can also use it to cover back salaries, including back payments to yourself and future payments to yourself. And you can use this for other operating expenses like insurance, licenses, utilities. You can back pay any back invoices that you owe, or you can pay future estimate invoices. The only thing that we really cannot do and we can't make work for this particular program is new inventory to sell. So that's the one thing that we haven't been able to find a way to fold in for and get to work with the guidelines here. But other than that, pretty much any expense that is required to reopen or remain open is allowable under this particular program. So what's the process? So the process is actually very, very quick. And we are looking at moving this money as quickly as possible. So this isn't one of those these processes that's going to take you weeks or months in order to get through. You're going to go to a website that we've set up where the application is housed. It's PSE, as in Partners for Self-Employment, inc.org. You're going to download the application. You're going to fill it out. You are then, if you find yourself in need of any technical assistance to complete the application, you can send an email to success@partnersforselfemployment.org, or there's a special phone number that's been set up specifically for this program where you can reach somebody from 9 a.m. to 9 p.m. Monday through Wednesday, and 9 a.m. to 6 p.m. Thursdays and Fridays to get technical assistance on completing the application. I would love to tell you that phone number, except I don't remember it, but it's on the website. It's a 786 number. So you'll call, you'll get your technical assistance. Once you're ready to upload the documents, make sure to upload all of the required attachments. This process is very quick if you turn in a complete loan application. So upload the application, all of the required attachments onto the website. You'll get a notification that your application has been received. If you prefer, for whatever reason, to turn in a paper application, we are taking paper applications on Tuesdays only in our office at 3000 Biscayne Boulevard in Suite 215 from 10 a.m. to 4 p.m. You'll come in. The building is requiring that individuals come in masked, so please remember to bring yours with you. You can come in and drop off your application. Because we're trying to limit contact for our staff, your application will not be checked right then and there. You'll simply drop it off. Once we receive your application, whether that be online or in person, your application is reviewed. If your application is not complete, if you're missing some documents, or if we need clarification on anything, you'll get an opportunity to make corrections. So there's a cure period. You'll get an email from one of the staff members saying, these are the items that are pending. Please get them to us. If you need to discuss this, this is the phone number to reach us. This is how you get on our calendar. You go through that process. We cure the application, everything is complete. Then we move into closing. So we are doing closings weekly. So ideally, if you get your application to us early enough in the week and it is complete, then we're doing closings on Fridays. You must have an open business bank account because we are not writing checks for this. That's how we're able to do this quickly. Monies, once you've executed a promissory note, you've given us all of the required attachments at closing, which is driver's license, social security card, all the things that we need in order to prove identity. Monies will be transferred into your account. So that's the process. And like I said, we're doing closings weekly. So if you can get complete applications to us this week, at latest, you should be closing the following Friday. And that is the program in a nutshell.
Let me see. Thank you very much for.
Awesome. Maria, could you answer one question for me?
Of course.
And maybe other people have this question. What constitutes an employee? What if I'm paying somebody cash under the table? Is it 2 W-2, 1099?
So we love our creative accounting in Dade County. I recognize that. Unfortunately, we need to be able to prove payment. These are federal dollars. So if you are paying somebody cash, nothing I can do about that. If you are paying somebody 1099, they are not an employee. They are a small business. They can apply for themselves if they so choose to. But for this particular program, an employee is an actual employee who has a leave-in earnings statement, who you treat as an employee. They've got a job description, they've got a salary rate, they work for you full or part-time, and you deduct payroll taxes for them. The only time that we're not required to do the payroll tax verification is if you are an employee of your business. So if you can show where all or part of your personal income is coming from the business, then the expectation is that you will declare that income on your personal tax returns, and you can be considered an employee of your own business.
Okay, so that's in that sense is similar to the PPP program.
Mm-hmm.
Okay, very good. Well, if you have more questions, type them, and then we'll go over them at the end. So let's go ahead and welcome MJ now to talk about the newest program from the county that was recently passed and that is coming up pretty soon. So MJ, the floor is yours.
Sure. So this is the RISE program, reinvesting in our small business economy. This program hopefully will go live June 30th or July 1. This is a loan. This is a loan. This is a loan. It is a rather affordable loan at the prime interest rate of 3.25%. And so small businesses in Miami-Dade County that have been in business for 2 years or more are able to borrow up to 6 times their rent or 3 times their, the 6 times their commercial rent or mortgage, or 3 times their residential rent or residential mortgage at 3.25% and pay that off over a 3-year period, with the maximum loan amount being $30,000. The money can be used towards anything. We are still working out some of the kinks. You'll be able to access these funds by reaching out to the website and or any of your local CDFIs. So the CDFIs are being finalized. There'll be more information to come, but we wanted to make sure that you guys are just aware of this program and to be looking out for it. If it's something that you think that you need, please keep your eyes peeled, and this should, pop up. And there's some already information out there, but it's expecting to go live at the end of this month as we're just nailing down some of the final details. It's a loan. You do not have to prove that you were affected by COVID-19. We assume that all businesses are affected by COVID-19. The documentation is rather simple and easy. Looking to prove that you are a business, looking to show that your business brought in less than $2 million in revenue last year. You do need a business account, like Maria mentioned, and for the safety of all people, everything will be done online. Your documentation will be submitted online. And everything like that. There'll be a website. You'll be able to reach out to different CDFIs to get technical assistance if you need help preparing some of the documents. You do need a credit score of higher than 575, and 20% of the ownership stake needs to be in Miami-Dade. 50% actually needs to be in Miami-Dade County. So the business really needs to be owned by someone that lives in Miami-Dade County. And then no foreclosures or bankruptcies in the past 3 years. Pretty simple, easy, really looking to help people stay in their commercial spaces, right? So you'll be able to get basically 6 months of rent, pay that over a period of 3 years, and also support people in their apartments or residents if they have at-home or online businesses. Both programs are really great programs. You see there is a list of documents that you need, pretty simple, easy, nothing too complicated. And the idea is really to get this money out there to the community, to add some liquidity for some businesses and provide some breathing room as they're able to access a rate that oftentimes is almost pretty difficult to access for the type of clients that we serve, and almost really any client. That's all I got. Say keep your eyes posted. Of course, as that goes live, Marcella will be sending out information, but you also should see some information on your local publications and different things like that.
Well, great, MJ. MJ, can you share with the participants, like, how are all the CDFIs involved in the program with the county?
Sure, the CDFIs will be
one?
involved as a point of access, right? Being that we work with the majority of these borrowers, we'll be the ones to collect the applications. The CDFIs will collect the applications, review the applications, and help you out with the documentation. If you have any questions, concerns, or putting together the profit and loss, the CDFIs will help you do that.
Okay, so Partners for Self-Employment, for example, is
we
another
can't necessarily mention who the CDFIs will be at the moment. We want to make sure that everything is taken care of first before we lead anybody into engaging the CDFI that maybe is not participating. So we just want to make sure that individuals pay attention to their local publications. And if you got this email and have participated in this, you will probably get an email with information and where to find this out. But I would say keep your eyes open as another program that can not only help small businesses, but I see some of our partners on here that can help out some of our clients.
Absolutely.
And again, the money can be used towards anything. It doesn't have to go towards rent or mortgage or keeping employees or anything like that. You can use this money for anything and everything.
Great, great. So with that, then, if you guys have questions, please send them, type them in. I just wanted to ask you a question, Maria, for the loan forgivable program. Is there a minimum credit score that participants have to have?
No. So we've also developed a point system for this particular program. The only time, and we have not come across one where we've had to do this yet. So the only time where we've given that we will give a business, because like I said, it hasn't happened yet. We will give a business the option of having their personal or business credit looked at is if they need points. So if they didn't get enough points for the retention of jobs, or they didn't get enough points for being in business long enough, or being able to show the cash flow prior to March 2020. So anything that, if a business, so it's difficult to understand it without, or to explain without looking at the grade sheet, but you get points for like a ton of like different things, right? You can get points for making jobs available to individuals who are marginalized, to individuals who are low income, for having your business in a low income area. So if you don't get quite enough points and you want to throw your credit in there as a way to get some additional points, that's the only time that we'll check it.
Okay. Well,
And that's not done without the client's consent. So the client would know in advance.
Perfect, perfect, great. Well, good. So I know I had some questions that I have been hearing from some of the businesses that I've been working with. Until that time that maybe you as the participants are sending your questions, to the chat box. But one of the questions, and this is probably more for Javier, in the case of the the sole proprietors, either sole proprietor or through the just as an LLC, and they got their payroll, the paycheck approval based on their payroll, which is their Schedule C. What kind of documentation do they have to show so that it proves that the money was used for them as their income in a way that is compliant with SBA?
So that is an interesting question, because we still don't know really well on the sole proprietorship side. So the way it was originated was based off your 2019 earnings, right? So your net earnings through your personal income statement that you have on your Schedule C. The expectation is all we have to see is those underlying expenses being used, right? So if you pay yourself, or if you're, those other expenses are more clear, but I think the one in question is payroll. Our expectation is if you just indicate that the maximum amount that you're allowed to quote unquote pay yourself under the forgiveness perspective is right now $46,153 during the 24-week period. And that's for any employee or person. They cannot be paid more than that. So if you demonstrate that you retain that for your own purposes and in aggregate of the other expenses, if that equals your loan amount, then that should be forgiven.
Okay. So basically,
does that make sense?
I think so. So for the sole proprietor, what they need to do is just write themselves a check that it's up to, the amount that doesn't go over the 46, but also just, based on their amount that was approved. And then just write themselves themselves a check, and then just with that, they're compliant. They pay themselves their payroll. That's pretty much it. That's simple.
Exactly.
Okay. Yeah, some borrowers are very afraid of using their money because they don't know if they're going to use it right and then get in trouble later. Or not get in trouble, but not get it forgiven. Okay, thank you so much, Javier. Let's see. I have a question here from Gloria. She's asking, are those two programs incompatible? The loan forgivable program that Maria spoke about, and the new program, the RISE program that MJ discussed. They're not incompatible. They're just different, right? But if you want to, guys, both talk about that.
You could access both of those programs if you wanted to. Yeah, I think compatibility is a interesting choice of words. But yeah, you can, if you needed both of them and saw that can help your business, you can definitely access both of those.
And I think in that way, it's what you can qualify for when you can demonstrate for one or the other,
Well, they both pretty much have very similar qualifications. What I would suggest is if, Maria's is really more around keeping your employees. Ours is a bit maybe more situated to being able to pay the rent for the place and where your employees work. So yeah, you might really want to use both. If you could see that working out for your business, you're more than welcome to do that, and we will more than welcome to support you in being able to do that. And there's no negativity around accessing both of those dollars. Both of the programs are for, and not to speak for Maria, but both of the programs are supposed to be to help the small businesses. So if you find either one of those as something that can help your business, please do apply for both. Please reach out to either one of our organizations to help you apply for both.
Maria, do you want to share?
Can I intervene?
Oh, Liliana.
Yes,
Sure.
good afternoon. Thank you.
Good afternoon.
Thank you for putting this together, and it's amazing how we as a small business can receive these kind of services and illustration, because there is many things out there, but sometimes it's confusing. So having the experts here directly talking to us is very helpful. The reason why I was asking if it was compatible or not, because at the end, listening to the paperwork that we had to submit is pretty much similar. But one of the good things the program that is offering by Mr. Greens is that you can use it for no limitation, and that's an opportunity for us, the micro businesses, to do something and to find ways to grow. So that's why I was asking if there is any incompatibility, and I do appreciate your response. Now, for Ms. Claro, I would like to ask, so you mentioned it, we have received the PPP, and most of the cases we receive a PPP for the micro business, but it's not enough. It was pretty much very limited. Actually, we are doing what we were supposed to do, that we hire and we are implementing pay store with a company, everything regulated. So there are 2 months and you are out of funds, so you don't have any more cash flow. So that's why we are looking for other opportunities for capital, and this is a great opportunity. I already submit the paper, the solicitation for the partner for self-employment. Now,
It might be why your name looks a little familiar. I couldn't figure out why it looked familiar.
Yes, ma'am. Yes, ma'am. Actually, I am advocate for all the Hispanic micro businesses because most of the times all of this information is in English, and there are many that we are, looking and it's difficult to understand for those that have no ability to understand and speak English. It's not that I speak very well, but I've been trying. I've been trying really hard. So after the 8 weeks, my 8 weeks will be ending on. I got it on April 20th, so my 8 weeks will be ending on June. So we are already in June. So that's why I was looking for other opportunity, because I want to maintain the employees, and besides that, I have already to create another 2 positions. So I wanted to continue doing what I'm doing, because that's what the economy needs. So in that sense, I will be eligible now that 8 weeks already passed.
Yeah, when your 8 weeks pass. So if you got it April 20th,
yes, ma'am.
I'm assuming your 8 weeks began right around April 20th. So right after your 8 weeks pass is
Yes.
when you would be eligible. So I made a note to ask where your application is in process. But
Miss Lisa was very kind, assisting me.
Okay.
Great.
Thank you.
Very good. Well, thank you, Liliana, for the question.
Thank you.
We have another question here from another participant, from Marguerite. She's asking, if somebody applied for the EIDL and they haven't been approved yet, is this person qualified for this program? And I'm assuming it's either one for the Forgivable or for the RISE program MJ talked about.
So for our program, yes, absolutely, the person would be eligible.
For our program, the person is also eligible. We will just say that priority is giving to individuals who haven't received those funds. So we will, their application will be set aside, and we will try to fund applications for individuals who haven't received anything. But if they have applied for EIDL and they didn't get any money, then they will be in the normal flow of applications. Have they received the funds? It's still possible that they could access our funds, but they're giving priority to individuals who have not received PPP or EIDL.
Great. Okay. Well, I'm checking here. Looks like that's all the questions we have for now. So I just wanted, before we kind of like go, because we have a few more minutes, I wanted to ask you, Jorge, Javier, Maria, and MJ, what can the participants do now to make sure that they are prepared to access this funding? We have some ideas in there, gather documentation, obviously figure out how much they need to know, planning their cash flow. But is there any specific, tips that you guys have that you think will really help them when they are applying for this program or for the forgiveness?
I'll go first, and I'll say prepare, plan, and stay in contact with your local lenders and banks in which you have relationships with, because they're going to be able to provide you the most amount of information. Get on all the CDFIs in Miami, get on their mailing list, follow Partner for Self-Employment's website, reach out to your local business banker, and that's really going to be your resource and source of information. Other than that, as Gloria kind of mentioned, you know, plan for what this money and how it can help you, and figure out how that works within your business, and then go after those dollars, and then using those relationships to help you appropriately apply for the different applications.
Thank you.
The one thing that I would say to our small businesses is don't be discouraged by it. So, and be creative, right? So what do you do in order to prepare other than get all your documentation in order? Take a look at what programs are requiring. Programs are required, if a particular program that you're interested in is requiring that your staff be employees, start looking at what that looks like. What does it mean to do that? How is it that you can get with your accountant and see if there's a way for those 1099s to, I mean, I'm not telling anybody to do anything they're not supposed to do. I'm saying that big business can get real creative because they access the resources that they have available to them. And I would advise small businesses to do that as well. Look at the rules, understand the rules, and if you can understand the rules, then you know how to get around them.
And I guess I would like to reiterate MJ's point. Communication is key. You know, stay in contact with the corresponding lenders. The one thing that we all have learned as things change, and they change quite often. So even the lenders are on their toes, but you need to stay in touch with them. At least that way you're up to date with all the information that could be used to help your small business get through this critical time in our economy.
Very good. Well, thank you very much to all of you for sharing your knowledge and tips and ideas, and to participants for joining us today to learn more about you know, opportunities for accessing capital and you know, just really help your businesses. So what we're going to do is we're recording the session. We're going to make sure that it's available to you afterwards. And then we're going to share with you some resources that Maria, you know, gave us so that you guys know where you can go and apply and go through the process, and some of the information that MJ was referring to from the Disney County program, where you guys can go and check it out and just sign up so that you can hear when the program is out and ready. So that you guys are ready to prepare for that. And so with no other comments here, we are going to close, and I'm glad we're able to keep it under our timeline. But I just want to thank you, Javier, Maria, and MJ, and all of you guys who participated. You know, it's lovely to see you and be connected this way, clients, partners, to join us this afternoon to hear about it. So with that, thank you, and we'll stay in touch. We'll keep you posted. And you guys, if you have any questions, feel free to email us so that we will be able to help you that way. Thank you so much, and you guys have a great afternoon.
Thank you.
You guys take care.
Thank you.
Okay, bye-bye, everybody.